Now that the economy is picking up, cash flow still is an enormous priority for businesses. I think we all talk about cash flow as being an issue during recession, but I think actually as we come out of recession, it's also very important that companies continue to focus on it. Certainly we're hearing that from our customers and also through some of the research that we've done recently, where the majority of CFOs that we talked to actually mentioned cash flow as a key priority for them. And I think what's very interesting about that is that they need to find ways to invest. So they're looking to grow their organisations. And to do that, they need to free up funds internally through managing their cash flow, through understanding what's going out of the business and what's coming into the business, and making sure that they have that absolutely in balance. So I think one of the big challenges for growing businesses is really understanding their cash flow position. It's having the data to know exactly when they are paying their suppliers and when they're receiving cash in from their customers, and potentially finding alternative ways of funding that difference. Most of the small organisations that we work with are very focused on making sure they have the right goods and services, but not necessarily focused on collecting the money from their customers. And that then inevitably causes them problems. Where we hope to step in is to provide them with solutions that can give them alternative methods of funding to fill that gap. So I think you need to be creative with cash flow problems. I think everybody has a relationship with their bank. Most small organisations have overdraft facilities, they have loans with their bank. But I think it's important that companies look for alternative solutions. So things like using corporate cards, virtual payments. American Express has just launched a new product called buyer-initiated payments, all of which can help companies get extended payment terms. And essentially that's what's helpful in terms of not having to pay your suppliers personally so quickly, but using another mechanism to do that for you. Benefits of using American Express for working capital are, first of all, you get extended payment terms. So when you use a card, you get up to 55 days to settle your bill. Your supplier, in the meantime, will be paid in 5 days. You can take benefit from early pay discounts, which American Express has essentially funded for you. The second benefit is that you can really build supplier relationships. So the supplier knows exactly when they're going to be paid, and that enables you to negotiate even better deals with them. And the third benefit is that through doing both of those things, you can really invest for growth. So you know what your cash flow position is, you're managing it well, you're getting the best deals from your suppliers, and you free up funds to invest in your business. My tips for companies who are struggling to pay their suppliers on time is look out there for advice. Try and get advice from different organisations, different ways of doing business. Companies like American Express can provide advice to small customers, medium-sized customers, large customers, because we have a huge customer base that we can share benchmarks with. So don't be too narrow in your approach, really think broadly, make sure you're getting the best advice and the best management information to build your strategy on.